Good afternoon. Welcome everybody to today's webinar. My name is Jane Stevens. I'm the training manager here at Zolo, and we are joined today by Zolo Mortgages. I have Mahir and Prince joining me. They're going to take over and talk to you guys about mortgages. I know that this always results in lots of questions, so please do chat with us. Feel free to raise your hand if you'd like for us to unmute you and we can have a conversation, because yes, lots of questions come up. So I'm just going to admit a few people here. We'll get started in a few seconds. Let me just see here. We've got a few people joining us. I've just admitted everybody. Good afternoon, Mahir and Prince. Welcome to today's webinar, and thanks for hosting this today.
Thanks, Jane, for the warm welcome. Welcome everyone to Zolo Mortgages. We will be doing this as a very interactive meeting. So as Jane mentioned, feel free to ask questions. We hope to educate you on not only how Zolo Mortgages works, but the mortgage industry in general. So please, if you are new to business, or even if you are an experienced agent, ask any questions. Don't be afraid. I am going to take over the screen share now. Jane, is that okay?
Absolutely. Go ahead.
Perfect. Share. Okay, perfect. And hold on 1 second. I'm just going to go to presenter view. Okay. Jane, are we okay with my screen?
Absolutely. I can see it.
Okay, perfect. Great. I'll just do a quick intro again. My name again is Mahir Sanara. I am principal mortgage broker at Zolo Mortgages. And today I have with me Prince. Prince is a mortgage agent. You may be familiar with him if you are on Workplace. Prince has been doing a great job in keeping Workplace updated with our rates and our products. So Prince, welcome to the meeting.
Thank you so much. And Jane, thank you for having us. I appreciate it. And like Mihir said, some of you may have seen my post on Workplace, and maybe I may have even interacted with you already, because I get a lot of calls from real estate agents, and it's very hard for me to keep track on the people that I speak with. So if you haven't already spoken with me, my name is Prince, and I'm a mortgage agent. As Mihir said, I'm a team lead that have about 10 mortgage agents under me. So I have experience underwriting both commercial and residential loans, and I've worked with an institutional lender. I used to work with TD, I've worked with Desjardins, and I used to also work at a brokerage with a brokerage called Butler Mortgage. So I have experiences in both aisles. With an institutional lender and with a brokerage. And right now, my main focus is to, enhance the customer service and win more business. So, like Mihir said, if you have any questions, you feel free to reach out to me. So I'm available on Slack. I'm available on WhatsApp, and you can also send me an SMS on the number that you see on the screen. I'm very quick to respond because my phone is always with me. So if you have any questions, and maybe if you call and you're not able to get through to me, you can leave a voicemail. You can also text me, and I'll get back to you within the shortest possible time. So in today's meeting, I think Mihir, do you want to talk about the introduction a little bit?
Yeah, sure. I'll just do a brief overview. These are the topics that we usually cover in these meetings. We go over Zolo Mortgages. We do a brief introduction to Zolo Mortgages. We talk about rates and mortgage news. We talk about pre-approvals, which is something that we get a lot of questions about. Of course, everyone here is working Zolo leads. Zolo leads are very, very early in the pipeline. So a lot of these clients are looking to get pre-approved, and we do pre-approvals. We can do lender pre-approvals. We can also do in-house pre-approvals. So we can help you make sure that the client you're working with is good. And we'll go over that in detail. New stress tests for insured and uninsured. There are some changes to qualification rates that we will be discussing. Converting lease leads to buys. A lot of new to business agents are working lease leads. And to be very honest with you, there's a lot of common ground between buyers and renters or leasers. So just learning how to identify, is this person possibly a qualified buyer? That's something we'll be covering today. And then two of our programs that we see the most use of is New to Canada and Self-Employed. We'll be covering those as well. And And lastly, just in case you needed some other contact details, there are some other contact details for Zolo Mortgages. We are at mortgages@zolo.ca. Our application front end is at zolo.ca/mortgages. Feel free to take a look if you want to see what that looks like. Full disclosure, that may be changing in the near future. So who are we? I will just do a brief introduction onto Zolo Mortgages as a whole. Zolo Mortgages, this is version 2 of Zolo Mortgages. We were opened about 8 months ago. It was in October of last year. That's when we started operations. We've been growing and doing great. We have access to a whole bunch of lenders, everyone from Duca, Home Trust, TD. A lot of our A-side lending goes to credit union or smaller monoline lenders. So yeah, we have a lot of lenders that we work with. What can we do? We can cover 100% of the broker channel spectrum of lenders. We can do everything from highly qualified, very low rate clients to people who potentially have gone in without a financing condition with no income. And both of those are files that we're currently working on. I have a client out in Embro, Ontario, if you want to Google Maps that, who has gone in without a financing condition and also has no income. So we can do private financing for those clients with equity-based lending. Yes, we do get this question all the time. We can do up to 100% loan to value, no problem. Where are we licensed? We're currently licensed in Ontario and BC. We are in the next 6 months looking to grow across Canada. Mortgages, if you're not aware, is a very inside sales business. So being licensed across Canada is very beneficial. And how do you refer? Of course, you can refer to Prince at his phone number or even at his email. You can even send in email inquiries to mortgages@zolo.ca. That comes to me. I usually forward those to Prince. Okay, so Prince, do you want to take over for pre-approvals?
Yes, thank you. All right, so the pre-approvals, I would say, is very essential. I think we here just talked a little bit about the fact that somebody went in firm without an income. Over the past few weeks, right, I've dealt with numerous cases. So I would like to talk a little bit about two of them that I recently dealt with. The agent called me in the morning and said, "Oh, Prince, I'm under distress." I said, "Why are you under distress?" He said, "Okay, I have a firm offer and the bank just refused my client that they cannot give him a mortgage," right? So the first question I asked is that, did they get a pre-approval from the bank? And he said, "Oh, I asked them and they said they have, but I didn't ask for it. I didn't see it. I didn't request for it," right? So there are two clients. It's a gentleman and a brother-in-law that have purchased something in Windsor, right? They want to purchase a property that's $500,000, and they have already gone in firm and given the seller $15,000, right? So when the real estate agent called me, said, "Okay, I want you to handle this for me." So I called the applicant. I said, "Okay, hey, give me a little bit story about your situation. Are you working?" He said, "Yes, I'm working." "How much is your income?" $20,000. "How much is your brother-in-law's income?" $25,000. So both of them has a household income of $45,000. And I asked him, "Okay, so this $500,000 home that you buy, how much is your down payment?" He said, "Oh, my down payment is just $15,000. So I'm like, "Okay, 15,000 is all that you have in this world?" He said, "Yes." I said, "Okay, don't you have any other money for even clothing?" He said, "No." So I said, "Okay, for $500,000 purchase, you need a minimum of $25,000 as your down payment. So already, if you have gone in firm on this deal and all you have in this world is 15,000, you're already short on the down payment. Moreover, for a $500,000 home, because of the new stress test, you probably need maybe conservatively, you need about, let's say, about $95,000 as a household income to qualify for an insured purchase like that. And both you and your brother-in-law have only 45,000. So you're also short on the income." So I asked him, "Okay, so who gave you the confidence, or who told you that it's possible to do it with your situation right now?" said, oh, somebody just told me I'll be able to do that, right? So now the real estate agent is feeling very bad for the client because there's a clear understanding of the situation now that it's not possible for them to be able to close the deal because they don't have the minimum down payment and they don't have the required income. Okay, so in a case like this, there is a high chance that the client may lose their down payment. I mean their deposit, $15,000 is all that they have. Again, in this world, that is their maximum savings, and now they are on the verge of losing their maximum savings. So again, it's very important. Like we are not saying you have to do it as a mandatory, but I mean it's very important that you know from your client, or even if it's on a piece of paper or even a trail of an email saying that, okay, hey, this is how much this client is qualified for. And again, that is why Zolo Mortgage is there to do. So if you have a client and you are in doubt about the client's qualification, you can easily say, okay, hey, why don't you talk to Zolo Mortgage? And we are, there are two ways that we can even give a pre-approval. I sometimes, if I have a very solid client, I can even give them a verbal approval by taking some rough numbers. But a verbal approval is not as good as a formal approval. In a formal approval situation, then I'll send an application link to the client. The client will fill the application, and I'll request for some basic information and basic documents to be able to review the application properly and issue a pre-approval certificate, right? So I usually work at the level of at the comfort of the client, right? I said, okay, hey, this is what I can do. I can give you a verbal right now by just taking information from you and just say, okay, hey, based on what you have told me, I haven't verified anything. Based on what you have told me, you could potentially qualify for so much, right? But if you want it in writing, then fill out an application, right? So what when you have a pre-approval in your hand or a pre-approval certificate, and again, anytime I issue a pre-approval certificate, I also copy the real estate agent, all right? Just so that you are in the know that, okay, hey, this is how much my client has been pre-qualified for. So that there's no if and but, and there's no stories around how much the maximum purchase price, because sometimes clients can be a little bit tricky or a little funny. Maybe on paper they'll be pre-qualified for 500,000, but they will tell the real estate agent, oh, don't worry, I can go to 550 or 600, right? So I am, in order to bridge that misunderstanding, I always give a copy of the pre-approval certificate to the real estate agent, all right? And having a pre-approval on your hand also build trust with you and your client, right? And it gives you the confidence to even put in an offer for the client. So it's very important on the pre-approvals. I don't want to dwell too much there because pre-approvals is quite important to me because of the stories that I've been hearing lately. But if you have more questions about it, we can go because we have a lot of things to cover. So I will move on.
Hey, Prince, Parminder Singh is asking, does the pre-approval come from Zolo Mortgages or from a lender?
Okay, there are two ways that we can do it. We do it all the time, right? Normally, it will come from a Zolo mortgage, all right? Especially when I have a clean-cut client, like that I don't have any issues whatsoever with the documents that I've received. Like I'm saying, I used to be underwriter at the bank level, so I know what they look out for. But whenever I receive documents and I'm in doubt, and it's like it's a borderline issue, I always go an extra mile of getting the pre-approval straight from the bank, right, or from the lenders. So that is how we operate in Zolo Mortgage. If it's quite straightforward, we will issue the pre-approval certificate. But if we think that it's a borderline issue and we need more information from the lender for the lender to give us permission to go ahead with the pre-approval, then we touch base with the lender.
Great, thank you. Another question from Saida. Will Zolo Mortgages charge the clients for any steps, even for getting the mortgage?
Okay, so let's start from the pre-approval because sometimes I even get the questions about, are you going to charge me for the pre-approvals? The pre-approvals is free, okay? So like Mihir said, we have a host of lenders that we deal with. And there are, in the mortgage world, there are three buckets that you can get mortgage from. There's the A bucket, the B bucket, and the C or the private lender bucket, right? In most cases, or in all situations, from the A side, if you qualify for a prime deal, if you qualify for us to send you your application to the A lender, we don't charge anything, it's free of charge, right? But if you don't qualify on the A side and we have to take you to the B side, even on the B side, some of the lenders that we deal with pay us some commission, right? But in some cases too, we may have to charge, but it's on a case-by-case basis. But on the C side, on the private side, we always have to charge you for the services that we have rendered. And it's usually about 1% of the loan amount.
Okay, great. So just to clarify, pre-approvals are free if your clients are well qualified and we submit them to TD or any of our A lenders. There's absolutely no cost to the client. Private and alternate lending, there's always a cost. Right now, there's basically no brokerage not charging for those. One more question for Parminder. Do you pull credit bureau prior to pre-approvals?
Yes, we do. We do pull pre-approvals. Okay, so I get this question a lot, even directly from my clients and from real estate agents and people that I pull their credit. There's no way we can put our reputation online. I mean, what I mean by reputation is we cannot put Zolo reputation online without pulling your credit. We have to pull your credits just so that we can have a clear picture of your credit situation or the client's credit situation. What we pull is a hard pull. Okay, I'm not going to sit there and say, okay, it's a soft pull. It's going to be a hard pull. But the difference between us pulling you and the bank pulling you, or maybe any other brokerage pulling you, is that whenever somebody makes an inquiry on the Equifax or credit union, right? They make an inquiry or they pull your credit under a specific code, right? The code under which, let's say, Zolo Mortgage pulls your credit, that code gives us the permission to inquire about your credit without affecting your credit score. So yes, we will pull your credit. Yes, it's going to be a hard pull. No, it will not affect your credit score.
Yeah, and I'd just like to emphasize, guys, the credit score exists for a reason. It's to determine how much you can actually borrow. A pre-approval without a credit score or a credit report is useless. And I don't understand the hesitance that clients have with their credit score. I mean, it's there for a reason, to be used. Usually the people who are the most nervous about credit score end up being either the clients who are, one, shopping around a lot, or two, the clients who actually have something to hide. So those are the clients that we need to know their credit usually the most about. I'm going to answer one of these questions in writing. I've already typed out an answer. And Parminder asks again, is there any change on credit score requirements in the new stress test, as earlier CMHC minimum score was 680? I'll take this one, Prince. Guys, don't worry too much about credit score or even, whatever CMHC is doing. To be very honest with you, CMHC is not a good mortgage insurer, and their risk tolerance is extremely low. I would say the majority of lenders in this industry do not use CMHC for mortgage insurance anymore. Sagan and Canada Guarantee are the ones that have taken over, and their credit score qualification requirements go all the way down to 600. So we can do clients with credits as low as 600 on the credit score. Okay, Prince, I'm going to move on to the next slide here, which is qualifying criteria.
Okay, so when we are qualifying a client, right, these are the basic things that we look at. So when we pull your credit, we'll look at existing debt. We'll look at your score. Not only at your score, sometimes we dig a little deeper into making sure that there are not any derogatories. I mean, what I mean by derogatories is that you haven't missed any payments, and you are not under consumer proposal, you are not under credit counseling, or you don't have any bankruptcies, right? So those things are things that we look out for. And again, we also check to make sure that the name on the credit report and the personal information on the credit report is as what is shown on the let's say the photo ID or the personal information that was provided by the client, right? And in doing so, we also look at the process rate to qualify with the debt, right? So every institution have certain rules about how much about the qualification criteria, especially with the ratios and even with the credit score, right? So Mihir just mentioned that, okay, the minimum credit score for that we deal with is 600. The 600 doesn't mean that it cuts across all the lenders. Every lender is different, but we have a lender that will take the 600 plus, right? So that is also the benefit of dealing with a mortgage brokerage, and that's the benefit of also us dealing with a lot of lenders, because we have visibility of what we can use to qualify you, or where we can take your deal, or where we can take the client's deal. So there are options available with a slight rate premium for clients who have good credit, good score, but too much debt, right? So what that essentially means is that you could have a very good score, right? But you have too much debt, and too much debt essentially will mean that you go over the qualifying ratios threshold, which is the 3944. And again, in dealing with all the prime lenders, a lender take over the threshold of 3944 means that they will not accept the deal, even if it's over by like a percentage point or even a half a percentage, they will still not accept the deal, right? So in that case, whenever a client has too much debt and there's no possibility of him or her paying off some of the debt in order to bring these ratios in line, then it means that we may have to look elsewhere, especially on alternative lending. And alternative lending comes with slightly higher premium rates, right? Usually it's probably about a percentage point over the normal rate that we have, or sometimes even half a percentage point. So it's not overly high, but at least it's higher than the prime rates. And options are available for clients with previous bankruptcies and proposals. Yeah. So we have alternate lenders that if you have a proposal that has just been discharged, they will still accept it. And even with alternate lending, we have even lenders that accept credit score even at 500, right? So there's a range of possibilities for the client. So anytime a client calls us, we sort of try and see which bucket they will fit in, right? And whilst I'm here, I think it's also quite important that I also stress this. So on the A side, or in the A bucket, or from the prime side, if you purchase some a purchase price that is less than $1 million, and you're going to be putting less than 20% down, excuse me, then okay, thank you so much for taking me there. Okay, so for the minimum payment requirements, so the CMHU or the insured policy is that for the first 500,000, you have to put at least 5% down. And for the next 499,999, which is like just 1 cent less than 500,000, you have to put at least 10%. Okay. And for purchases over $1 million, you have to put 20%. So in stressing, before I go into the calculation, in stressing what I was about to say. So when you go to the alternate lending side, all right, if a client has too much debt and their ratios are well over the acceptable ratios of 3944, then the client will have to put at least 20% down for us to go to alternate lending. So the minimum down payment that you see here is acceptable on the prime side, on the A side. But when we go to the B side, then you have to put at least 20% down. They won't do anything less than 20% down. If you don't, if it's anything less than 20% down, it's going to be very hard for us to be able to broker the deal for you. Okay, so in this example, in a typical situation whereby somebody is purchasing a property of $800,000, that is the purchase price. So the down payment requirement is that 5% on the first 500,000, which is 25,000, and 10% on the remainder of the 300,000, which is 30,000. So for an $800,000 home, the person needs at least $55,000 as down payment. Okay, that is the minimum down payment for an $800,000 home. You can move to the next slide. Okay, so I think we are. When is this meeting until? When is the?
It's until 1 o'clock.
It's until 1. Okay. And when do we stop to pause for some questions?
We can stop anytime. There are a couple of questions if you'd like to answer them now.
Okay, sure. So let's tackle the questions. Yeah.
Yeah. So Ron is asking if the bank said no more than $500,000 approval, but the client is looking to borrow $650,000. Is it possible with Zolo Mortgages?
Okay, that's a tricky question, but again, we will need more information. So, what is the purchase price? Because you're talking about the loan amount now. Okay, I understand the loan amount, but we need to put it in proper context to understand how much is the purchase price and how much is the client going to put down as down payment, right? So, I mean, I don't have much details, but I'll strive to answer the question. If the bank decided that they were going to give 500,000 based on, let's say, 3944, and they are looking for 650, and the 650 is going to take them over the threshold of 3944, then we have to look at alternate lending. In that case, the person will need at least 20% down, right? But if they don't have 20% down, then unfortunately we cannot go over the threshold of 3944 unless they are willing to, I mean, reduce the purchase price, and in that case, reduce the loan amount to fall within the threshold.
Right, exactly. So there's a lot of elements to consider. If you do have a specific question or a specific client, please reach out to Prince via his email. I will put that back up over here at prince@zolo.ca. You know, don't be shy about reaching out about individual clients and individual situations. Yeah, we can do contract requalifying depending on the type of deal, as Prince mentioned there. We will come back to this, but Prince, did you want to cover this new OSFI rule? No.
Okay. Yeah, I'm here. Okay. So back in May, OSFI, which is the superintendent, the office of the superintendent of financial institutions that oversees and regulates the operations of financial institutions. Also, all the institutions that offer mortgages have to register under this institution, and it oversees and regulates everything that they do. So they made an announcement that because of how the market has become very hot, they have done some analysis, and they need to, proactively do something about the stress test. So the stress test was increased from 4.79 to 5.25, right? So what this stress test mean is that if before, so the stress test sort of reduced, okay, in plain and simple terms, it reduced the ability for people to borrow for more money. So let me just give you a simple scenario. So in the old scenario, whereby it was the stress test was 4.79, okay, if a client has $100,000 household income, and we assume that the person does not have any debt, zero debt, and the person is looking to purchase a property that has annual property tax of about $3,000, then the person could potentially qualify for a $500,000 total mortgage from the bank. Okay, with this new stress of 5.25, that amount of 500,000, this in the same scenario, $100,000 household income, $3,000 property tax, and with zero debt, the person now will qualify for $486,000. Okay, so that means by this stress test, it has reduced the purchasing power of borrowers, right? But not by a huge margin, because if you calculate the difference is about $14,000, which is not quite large, right? But again, it's a step to that will ensure that there's some level of normalcy in the market. So they first made this announcement for uninsured transactions or uninsured mortgages. So in this case, if you don't know what uninsured means, uninsured essentially means purchase price that is over $1 million. Okay, and in some cases, when you even have a purchase price that is less than $1 million, but you put at least 20% down, and you do 30-year amortization, is also considered as uninsured transaction, right? So that is what OSFI suggested. But when the federal government sat down and thought about the whole thing, the federal government said, okay, even though OSFI is doing this, we will also like to do the same for insured and uninsurable transactions. So because insured and uninsurable transaction usually is backed by the government, so to speak, by way of the CMHC policy, right? So the government said, okay, we will also like to follow suit. So the government also increased the stress test from 4.79 to 5.25. So in the, right now, the stress test is for both uninsured and insured transactions. So so if, let's say, you're dealing with a client that had a pre-approval that was issued, let's say, about 2 months or 60 days ago, then you may want the client to get another pre-approval, because the chances are that the person's purchasing power has been reduced by the new stress test. And it's very important, because I know some of you have been working with clients for the past 3 months, the past 4 months, right? And it's quite, I mean, it doesn't hurt for you to ask the client to go to whoever that gave them the pre-approval to make sure that they still qualify under the new stress test.
Yes, and I'd just like to apologize. I did not update these slides from last time. So as Prince mentioned, it does say uninsured here, but this affects all all mortgages actually. So
and whilst I'm there, I would like to also stress this. Okay, we have lenders. I think it's only one lender that we have that is doing this favor for us. So let's say if you have a client that signed a purchase and sale agreement prior to June 1st, okay, we have a client, we have a lender that is willing to qualify them under the old rate of 4.79. Okay, so that is an advantage, because we are still within June, right? So maybe you have a client that signed a purchase and sale agreement in May, but still have not gotten any mortgage. We have a client that can qualify them at the old rate if the purchase and sale agreement was signed before June 1st. So if you have anything like that, just reach out to us and we'll be able to help you with that, in that regard.
yes, great point. There are still opportunities for clients who do have. So let me just make sure that the wording is absolutely correct. On the agreement of purchase and sale, the final acceptance date has to be June 1st. Okay, so if the transaction is dated June 1st, let's say, but the actual acceptance date is June 2nd, that agreement of purchase and sale is not eligible. That confirmation of acceptance date has to be June 1st. Okay. I'm going to touch briefly on converting lease leads to buys. So if you are, actually, you know what, there's a question here, and maybe this is a good time to ask it. Prince, Sangeet is asking, is the down payment the same for investment properties? So let's go back to that down payment slide. Here we go.
Okay, so for an investment property, okay, if you want to rent the property, the general principle is that you have to put at least 20% down. Okay, you have to put at least 20% down on a rental property. All right, but sometimes especially if the client already has a property and they want to buy a second property and they are contemplating on whether to rent what they are living in now and rent the one that they are buying, or vice versa, right? So in order to take advantage of not paying, let's say, so much down payment, we usually advise that maybe it may be prudent for the client to rent their current home and buy the new one as owner occupied if they want to take advantage of putting less than 20% down.
Yeah, great point. As Prince mentioned, most of those investment programs that we have are at 20%. I've seen one of our agents do some crazy stuff for his investor clients. So if the clients have the appetite for higher rate, we can do equity-based lending all the way up to 100% on investment properties. You know, it's really, really crazy to see some of the stuff that private lenders are willing to do at this point in the industry. Private lending and near prime has come so far recently. It's crazy. But for rule of thumb, when you are speaking with your clients, say 20% for investment properties. Okay. Thank you, Prince. I'm going to take over for lease leads, and then maybe we can go back into questions. I'll just do 10 minutes on converting lease leads to buys. So when you're qualifying lease leads, you see some of the major components of mortgage qualification already. You see their credit score, you see their credit reports, you see their bank statements, so amount of available funds, you see their employment, so full-time employed, part-time employed, self-employed, whatever it may be, and you see their motivation, right? So they want to be in a home, and maybe they have a specific area in mind. Maybe their motivation, usually with leasing, there's a lot of divorce in the industry, right? So these clients are in a position where they need a home, they need it now, and they have a lot of money available. So those are all the elements of converting, basically what we look for when it comes to buyers as well. If you see a client who has a credit score that is above 600, if you see a client that has available funds of above $25,000, if the client is going in anyway with 1 year of rent up front, so I mean the average price for a detached home right now in Toronto is $2,500, or 20, close to there. 12 months of that is pretty close to, one sec. Sorry about that. So 12 months of rent at $2,500 is pretty much a down payment on a property anyway. So when you see those elements, you want to raise those clients with us, essentially. What you want to say is do a pre-approval, contact Prince, contact the mortgages at Zolo.ca channel, email, and say, look, this client is in a highly competitive lease market. They have enough money for potentially a down payment. Their credit report and credit score look great. Their employment is, pretty good, even if it's self-employed or you see a lot of part-time workers. Even if their income is CCB, that's Canada Child Benefit, not for both applicants, but for a co-applicant, that's totally fine. Call our mortgage agents, give them the contact number of your client, and let us do the hard work. We will keep you in the loop as to how much your client is qualified for. And then you can potentially approach them and say, hey, look, we're not winning in offers on leases, but you have enough money saved up and the payment would be the same for a mortgage. So maybe we can go to an area where you can afford to buy a home and in the future potentially upsize if that's something you're looking for. And this is a great way of, one, having a client for life, and two, capitalizing on an opportunity. So we do start a lot of our new agents out with leases only. And I know a lot of you are really hungry. So recognizing this opportunity is very important for your success in the industry. There is not a point in any agent's life where they will not consider a lease. Let me put it that way. Leases are very easy money. And there are points, this is a very seasonal business. Winters are slow. There are points where your cash flow is really tight and you need some money very soon. It doesn't matter if you're making a lot of money or very little money. Sometimes a lease is easy to do, right? So you just do it. And it's always a good idea to recognize when they may be a buyer. One of these programs that we actually get a lot of clients coming in is the new to Canada clients. Actually, Prince, if you are still around, would you like to cover some of the new to Canada details?
Yes. Okay. So new to Canada, and of course, I've done like a ton of calls, and I've qualified a lot of individuals under this program. So this program, we have a host of lenders that provide this kind of service, and even a chartered bank as TD Bank also have that program. So it's for individuals that are in Canada, all right? Whether they are on work permits, whether they are PR, right? That have a Canadian income. That means they are employed for at least 3 months, all right? They are in Canada, and they've been in Canada for at least 5 years, right? So anything over 5 years, you don't qualify under this program. But if you're under 5 years, and usually the 5-year rule pertains to people that probably came to school and now they found a job and they're working and they don't have enough credit history, right? So the banks understand those circumstances, that you could have, let's say, some large or small down payment, but only that you don't have enough credit history to prove that to prove your credit worthiness, right? So they allow it. Like, I've dealt with the situations whereby the person did not have a credit score at all, and were able to still get a mortgage for the person. So, like Mihir has put it here, said the benefit is that they do not have to have a significant credit history, because under the the standard rule, you should have at least 2 trades that are at least 2 years old. But under the New to Canada program, those don't apply. There are people that may have it. If you have it, it's a plus, right? But if you don't have it, it's okay. There are people that have, like, I'm dealing with a client that just recently had a credit profile open in 2021 in January, and I'm doing I'm looking for a mortgage under the New to Canada program. So it's a program that I think you should maybe sort of put it at your you should have it handy whenever you're speaking with an individual, especially people that are in programs or in industries that are in high demand, like the tech guys that are moving from the US, tech guys that are moving from elsewhere. When they come here, so long as they have a work permit and they have a job letter, or even if they are on contract, but the contract should be at least a year contract. It cannot be 6 months or less, right? It has to be at least a year contract. Then we'll be able to consider them for the New to Canada program.
Yeah, that's great, Prince. That covers pretty much everything about New to Canada. Guys, from a real estate perspective, what you have to realize is the majority of inquiries that we get, whether it's a lease or a buy, are going to be clients who are recently relocated to Canada. And I'm saying majority because I have worked these leads myself. I was a GM on the real estate side, so I know the business. This is a huge opportunity, and these clients are very savvy, right? They understand technology, they understand rates. Often they're very, probably more educated than some of our real estate agents on mortgages. So refer these clients to us and let us handle these, because there's a lot of tricky situations. Prince mentioned their work permits, PRs, the
Contracts.
So you said PRs?
No, contract. Some of them are also on contracts.
Oh, yes. Yeah. On contracts as well. With one of the things that potentially could be an issue for New to Canada clients is if they are on work permit and they end up buying in the GTA or the Greater Golden Horseshoe region, they may be subject to non-resident speculation tax. So that that qualification or that determination should be left to a mortgage agent or even their real estate lawyer. But let us figure out what the client really has to pay and disclose all costs to them. If you're not aware, and if this is something that you want to be knowledgeable about, NRST, non-resident speculation tax, is something that is in force in Ontario currently. It's a 15% tax on the purchase price or acquisition of interest in residential property. It is applicable in these areas. So the majority of areas that our agents work, all the way from Toronto out to Barrie, Hamilton, I believe London is here as well. That's Wellington, I believe. So yeah, all of these areas are effective. And who is subject to this? It's anyone who is not permanent resident status is subject to NRST with some exceptions. So let us make that determination. And yeah, that's it's a big cost for the clients to figure out on closing. You know what? I owe 15% to the government because I wasn't educated properly on the process, right? So just be aware of that. Just Google NRST. It's the first hit under Ontario Ministry of Finance. We do have another program here for self-employed individuals. Now, Prince, let me handle this one because there's quite a lot of criteria here to cover. We do get a lot of truck driver clients. We do get a lot of taxi driver clients. We are able to do stated income for these clients and qualify them. But we have to be very reasonable with the stated income. So if you're not aware, stated income is we take their gross income. Usually it's just 6 months bank statements. We add all of the income deposits up and we say that is the gross income. And then from that gross, we have to determine some sort of net income, some sort of reasonable net income that takes into account what their costs are to do business. That is basically the stated income program. And we do that on a daily basis. That's kind of our bread and butter. Prince and myself and some of the other agents here, we're very well versed on the stated income programs. Now, with stated income, Uber and Lyft, we cannot do those as stated income. Those will most likely, if you have a client who's exclusively Uber or Lyft, Prince, correct me if I'm wrong, will go private because Uber or Lyft are not seen as sort of a sustainable business model, right? It's always at the mercy of another company and it's sort of on-demand work. So it can change completely based on coronavirus or whatever else is out there. And also no gig workers. So, I mean, if there's other forms of food delivery, whatever else is sort of this on-demand work, as we call it. Unfortunately, we can't use that. And yeah, that's one of the things I want to emphasize. Through Equitable Bank, we're able to use only 6 months bank statements, and we're able to be extremely flexible with the 6 months of bank statements that we use. So, for example, I'll give you a good example. This was a little bit earlier in the year, but we had a client who had coronavirus in December. And this was around April, we were submitting this deal. So they couldn't work. They were a truck driver. They couldn't work in December. And that means that their income for both December and January was affected. Basically, it was zero. So what Equitable Bank let us do was they said, you know what, just give us the 2 months prior to when the client got sick. So we ended up going back to October, November, and then all the way for the rest of the year after January to qualify the client. And that deal worked out great. We were able to close on that. And that was just 6 months bank statements that we used for stated income qualifications. So there's a huge amount of flexibility that we have on the alternate side because of our relationship with our lenders. We're able to do stuff that other brokerages cannot at rates that don't even come close. The other thing I'd like to mention is we're not predatory, right? We're customer service focused. Our goal at the end of the day is to get the client the lowest rate possible. We do not want to exploit them. If this exact same client in the trucking industry who had coronavirus walked into any other brokerage, I am absolutely certain they would have been directed towards private lending and paying fees through their feet and just, getting absolutely screwed. So that's not our business model. We want repeat business. We understand that 1 year, 2 year, 3 years down the line, the client will have a new mortgage. They will have a new needs, maybe a growing family. And at that point, that's repeat business, not only for you, but for us. So we always treat these self-employed clients with white gloves. You never know whose business is going to take off, right? So yeah, it's absolutely essential that we can do these things, and just so that you're aware what our motto is. We do have these high GDS, TDS programs. I will touch on these briefly. ignore whatever's up there. High GDS TDS programs now have transitioned to something called near prime lending. Okay, so that's clients who may have, for example, great income, a great credit score, but because of the price point being out of their qualification range. So our highest qualification ratios on the A side are 39-44. Clients always approach us and say, you've approved me for X amount of money, but the home that I want is significantly higher than that. Can you do anything at a reasonable rate where I can still purchase that home and make blended interest and principal payments? And the answer to that is yes. We have high GDS TDS programs, some of which have no fees, right? So we are actually one of the few brokerages that has, I would say the only brokerage in Ontario that's opened in the last year that has access to Duca. Duca is an amazing credit union, amazing service. They're underwritten by CMLS. They allow qualification on contract rate. So basically, if the contract rate is 3.1%, that means that the actual qualification rate, instead of being 5.25%, is 3.1% as well. These are great ways for us to provide clients flexibility in terms of getting to that higher purchase price, right? For these contract rate purchases, for alternate lending with no lender fee, keep in mind that 20% down is required. So even if the client says, you approved me for $1 million, can I go up to 1.2? And if the client only has $200,000 down, the answer is no. But if there is other money available, even if it's gifted funds or funds abroad that they can bring into the country, which we see a lot, or if they own other properties, if they're able to extend their down payment, usually with our higher GDS TDS programs, we can get them the lending that they require. I will leave this screen up. Let me just see, did we miss anything? I don't think we did. So here is the contact info for Prince. Please reach out to him. We are active on Workplace as well. If you are not on Workplace, please join. Jane does control the training channel there, and Prince manages the Zolo Mortgages channel as well. So training is here with Jane. You are automatically added to training whenever you join, I believe. If not, just type in training and you will see the channel with the megaphone, and you can automatically subscribe to that channel. And Zolo Mortgages is here as well. You can subscribe to this channel so that you can get updates on our promos. We do have some promos going on right now. We do update with news and information on this channel as well. So there is plenty of stuff going on. Please, if you could, don't ask too many questions on Workplace. It's just because it's not something we monitor on a regular basis. Email us or text us for the quickest response. There are some questions, Prince. Okay, so Saeed is asking, if the client got a pre-approval 2 months ago, but did not buy so far, do we have to basically get the client pre-approved because of the new OSFI regulations?
Yes, I would say yes, because pre-approval is not an approval to lend. Pre-approval essentially gives you a sense of how much a client can qualify for if they were to send in a live deal or to send in an approval, right? So I would recommend that maybe if the client was not pre-approved through Zolo Mortgage, they can come to us, we can pre-approve them, or whoever that had pre-approved them, they can touch base with that person to see if they still qualify under the new stress test.
Yes, yeah, absolutely, guys. There's pre-approvals do hold rates, but there are a lot of caveats. There are a lot of conditions to pre-approvals, and one of those is if the qualification rate changes, then the pre-approval is null and void. So and going until June 1st, right? Going right until the deadline for this new OSFI regulation, pre-approvals were useful. with certain lenders who basically said, if you're pre-approved and you can get us a agreement of purchase and sale dated June 1st or prior on the confirmation of acceptance, your client will still be honored at the previous OSFI 4.79 qualification rate. But if your client has not been pre-approved since those new changes, they should go back and definitely get pre-approved, because that pre-approval is most likely no longer valid. There is a question here. If the buyer is buying their second property, what's the minimum down payment? So I think we covered this one, Prince, and the overall
I will answer it because second property, right? It depends on the intended purpose of the property, because you are allowed to have a second property as whether it's a vacation home, a cottage, or whatever, right? You are allowed to have a second home, right? That you could potentially put like let's say if the purchase price is less than $1 million, you can potentially put less than 20% down. But the purpose is very important. If it's going to be a rental property, then they will need at least 20% down. But if the intended purpose is for them to use it as a second property, then they can put less than 20% down if the purchase price is less than $1 million.
Great, thank you. We're almost at time. We've covered all of our slides. If there are any questions, we'd be happy to answer them.
Well, thank you so much, both of you, for always such an informative session. I know we always get lots of questions when you join us. And I did just want to say something about the converting lease leads to buyers, just because I have a lot of questions from new agents who have just joined, who are still in the process of doing their first 5 leases. I get the question a lot about whether or not they can assist a lease lead who is thinking about buying. And I just wanted to say that, yes, absolutely. Do reach out to Zolo Mortgages, work with them in qualifying your client. But yeah, even though you haven't done the first 5 leases at Zolo, you are licensed to sell real estate. So absolutely, you can help those lease leads hopefully buy a property. So I just wanted to throw that in there today.
Awesome. Great. Thank you so much, everyone, for your time. Thank you, Jane, for hosting us.
Thank you so much for joining me, and we'll see you guys on the next webinar. Thanks again.
Bye-bye.
Thank you. Okay, bye.
Bye-bye.